This is the Texas National Security Review, a new kind of journal committed to excellent scholarly rigor and big ideas. Why do we need another journal? Many scholars and policymakers have worked on the challenges of bridging the gap between academia and the world of practice and policy. War on the Rocks has partnered with the University of Texas to solve these problems. Texas National Security Review sits at the heart of this new partnership. Best practices of scholarly journals, double-blind peer review enabled by a strong editorial board, stable of reviewers, while otherwise remaking how these publications are produced and disseminated. While otherwise remaking? Wait a second. What? The Texas National Security Review maintains the best practices of scholarly journals, namely double-blind peer review enabled by a strong editorial board and a stable of reviewers, while otherwise remaking how these publications are produced and disseminated. I don't get what that sentence is saying. I don't know. Even though we are going to be rigorous, exclusive, and methodologically pluralistic. Methodologically pluralistic. Is methodologically? I thought methodically would be the word. Methodologically. There's no way this is a word. I mean, it is. It's in there. It's in the dictionary. It's in a dictionary, so it's a word. So it's a word. Okay. The reason that I brought this up because I saw this headline. It says, "What does the weaponization of global finance mean for the US dollar of dominance?" And I said, there's a lot of cool words in that headline. I have to see that. I have to check it out. So let's look at it together. Ooh, they're filling 2 positions on their editorial team. Ooh. Okay. $300 billion is a big number, even for a country the size of Russia. The United States and its allies froze roughly that amount belonging to Russia's central bank foreign currency reserves, equivalent to about 35% of Russian GDP, froze assets in a wide range of individuals and Russian banks, and severely limited Russia's access to the SWIFT payment system. So for clarification, SWIFT payment system. I like this, Investopedia. What is the SWIFT banking system? Society for Worldwide Interbank Financial Telecommunications. SWIFT is a vast messaging network banks and other financial institutions use to quickly, accurately, and securely send and receive information such as money transfer instructions. So Russia can no longer use this to transact internationally. And so that makes it very difficult. The Society for Worldwide Interbank Financial Telecommunications, SWIFT, is a vast messaging network banks and other financial institutions use to quickly, accurately, and securely send and receive information, such as money transfer instructions. So Russia can no longer use this system, so it is difficult to transact internationally. Back to the article. The action represents a tectonic shift from the policy of neutrality, signaling to the world that each country's access to the reserves could become contingent on their foreign policy. In response, Russia has sought to rely on non-dollar payment systems and to exhaust non-dollar reserve assets, joining Iran and other countries sanctioned by the United States in pursuing alternatives. Slow decline in the dollar's dominance since 2000. The role of the dollar has been declining for the past 2 decades, down from 70% to 60% over that period. So 10%. A shift to non-traditional reserves is broad-based and now stands at nearly 10% of total identified reserves at the end of 2021. 2 key factors. First, growing liquidity in currencies outside the big four, the dollar, pound, sterling, yen, and euro. Markets with an abundant supply of investable assets with low transaction costs. However, falling transaction costs following the advent of electronic trading platforms automated market making, and automated liquidity management. The second factor driving the dollar's erosion as a reserve currency is a growing push by reserve currency managers toward active reserve management due to the demarcation of investment tranche from liquidity tranche. Let's see. Did I spell did I pronounce tranche right? Yeah, I did. Okay. So it says foreign cargo used to be priced predominantly in dollars, but that is changing after the outbreak of the war in Ukraine. Russia is now invoicing its commodity exports to non-friendly nations in rubles. Saudi Arabia is open to China paying for oil in renminbi. We are starting to see efforts to move away from the dollar in the invoicing realm. And of course, China's rise as the largest trading partner for many nations increases their need for renminbi assets. Do post Ukraine financial sanctions represent a regime change? The actions to freeze Russian reserves have raised alarms in global markets. It has been reported that the Chinese finance ministry has been put on alert and called for risk scenarios. There are three core reasons that the dollar will retain its dominant position. That's just, the expected outcome. The first is liquidity. It's difficult to find true alternatives to the dollar given the depth and liquidity of the US financial market and its reliably positive treasury bond yields. Second, desirable reserve currencies need to be dependably tradable. Markets believe that the dollar amply possesses these traits, which makes transitioning to an alternative reserve currency extremely challenging. Third, the complexity of recreating the whole ecosystem in a different currency renders a regime change unlikely. The decline in the dollar has advanced at a glacial pace. It is hard to see a dramatic acceleration in the pace of the dollar decline, given the difficulty in disassembling the complex dollar based ecosystem of trade invoicing, credit, and reserve status. So, yeah, I mean, it's just like, yeah, it's been set up on the dollar. It's going to be so complicated to change to a different type of currency. Could the renminbi and gold dethrone the dollar? Definitely more politically acceptable to countries outside the West. They have their limitations. Russia's experience has meaningful insights. Russia was determined to reduce exposure to the dollar and rotated heavily into gold and the renminbi. However, neither choice provided the reserve functionality of a dollar allied reserves. On the one hand, gold reserves are not user friendly in large quantities. Absolutely true. You can't digitally transfer a bunch of gold. Central bank gold reserves are traditionally held in deposit in New York or London, but there had been a push by Russia and others to store gold domestically in order to prevent it being subject to U.S. sanctions. That's actually an interesting topic, and that's another subject. But the fact that like the physical gold is in central locations, even though other countries and other people own them, so the physical supply is being controlled by like only a few people. So that is an interesting question to raise. The renminbi offers a potential long-term alternative and will likely attract some additional reserves from its political allies in the wake of the Russian sanctions. No, man, this is a long article. Hey, jeez. Can digital assets provide a globally attractive alternative? It's possible that digital assets will emerge that are beyond the reach of geopolitical influence and still mimicking features of classical reserves in terms of safety and liquidity. We believe that the origin and design of most digital assets are likely to reinforce, not undermine, the dollar's dominance. The dollar is the primary fiat currency and underpinning most stablecoins, and they are backed by U.S. Treasury bills or other low risk dollar money market instruments. Most of the innovation in this sector is embedded within the U.S. economy, despite the concept of non territoriality. That's a great word. Territoriality. I like that. Thus, it is very difficult to dethrone the dollar as the reserve currency of choice. Residual risk to the current order. Recent international monetary fund research shows that the technology fragmentation alone can lead to losses of nearly 5% of GDP for many countries. Even a modest increase in the pace of fragmentation in the global financial order could amplify the negative impacts from the fragmentation of real economic activities from friend shoring or other forms of deglobalization across countries and technologies. What is friend shoring? Can we look that up real quick? Bloomberg. What is friend shoring? Is WAPO not going to let me read this article? What should the impact be? Who would lose out? Who would be the winners in friend shoring? What is friend shoring? Janet Yellen has proposed friend shoring as a means to insulate global supply chains from international disruption or economic coercion. The idea is for a group of countries with shared values to deploy policies encouraging companies to spread manufacturing within that group. Interesting. The goal is to prevent less like minded nations from unfairly leveraging their market position in key raw materials, technologies, or products to disrupt the U.S. economy or those of its allies. It's one of several twists of the term offshoring, the large scale push by companies earlier in the century to move what operations they could to places where it's cheaper to operate. Another iteration is reshoring. That's interesting. So this is to say that we want to avoid certain countries from having a monopoly on manufacturing because that could be dangerous in the long term. So the suggestion is that uh, groups of countries with shared values would encourage companies to spread manufacturing within that group instead of one group of countries with with different shared values. Oh man, actually, now that I think about it, what is this accomplishing? Whatever. One clear conclusion from the extraordinary weaponization of the dollar in the Ukraine war is that it serves to increase incentives towards financial fragmentation. So I think when it refers to financial fragmentation, it means that a world where there are countries that do not trade with each other because they use different currencies and they don't need to trade with each other. That's definitely a possibility. We are very reliant on the dollar for international trade, but it's always possible that something else will take its place and will allow countries that would prefer to be isolationists to do so. Or would also allow countries that have been sanctioned or have been removed from SWIFT to continue transacting business with other friendly countries.